For pensions. For most people, a pension is the most tax efficient vehicle we have for building wealth in the UK. So much so that the Treasury estimates that pension tax relief costs the government £50 billion per year. Given that there is such a big hole to be filled and all of the other big tax raising revenues have been ruled out, yet again, speculation is rife that we could see significant changes to pensions, with the biggest tax raising opportunity being in how pension tax relief works, which is viewed by many as being skewed towards higher earners. If you are a higher or additional rate taxpayer getting 40 or 45% tax relief on your pension contributions, then clearly you're getting a much bigger boost towards your retirement savings than a basic rate taxpayer. As such, some think tanks and politicians have supported the idea of a flat rate of income tax relief. In the past, even Rachel Reeves herself has suggested a flat rate of 33% would be a good idea. If there is a chance that a change like this is brought in immediately, then perhaps basic rate taxpayers should hold off on making pension contributions until after the budget, whilst higher rate taxpayers should expedite their contributions to make use of higher tax relief whilst they still can. But let's just think about this. Although the idea may sound simple, this would be a radical change from how pensions have worked in the past. It would require re-educating the population on the fundamentals of how pensions work, making them even more confusing, which might put people off using them. It would also add a lot of cost and complexity for employers, and according to the Pension and Life Savings Association, it would take at least 2 to 3 years to update payroll systems to work in this way. Given that Reeves is backed into a corner, she may decide to push through a change here. However, it seems impossible that a change of this magnitude could be implemented overnight. It would probably take years. So, in summary, I don't think there's any point in speculating about this type of change now. An easier target would be for the government to start applying national insurance to employer pension contributions. Currently, if your employer makes a contribution directly to your pension, it avoids both income tax and national insurance. Whereas if you make a personal pension contribution, you get income tax relief, but no relief on national insurance. This asymmetry has resulted in what's known as salary sacrifice, where employees can choose to sacrifice some of their salary in return for their employer making a larger pension contribution that avoids national insurance. Scrapping salary sacrifice in its entirety would clearly be a breach of the government's manifesto not to increase national insurance or raise taxes on ordinary working people. But Reeves had no problem increasing employers' national insurance in April, so she could choose to apply some or all of that rate to employer pension contributions. This would yet again increase costs for employers, much of which would likely feed its way through to employees anyway via reduced hiring and smaller pay rises. But it is a backdoor option that apparently somehow enables the government to keep their manifesto intact.